everyone. The next panel, wait a minute, what's really banking as a platform? Let's focus only on bank as a platform. And I would like for each one of you to introduce yourselves. And then I will read something. And that something that I'm reading will help us launch the discussion. I hope that I'll read it correctly. So why don't you start introducing yourself?
Sure. Hi, I'm Roland. I'm CEO of solarisBank, and solarisBank enables contextual banking. So for anybody that wants to include a financial solution in your ecosystem and offering, we have all the building blocks available to do that.
I think we're all about to say very similar things on this stage. My name is Rippingale. I'm the CEO of Bankingblocks. We're a Belgium-licensed financial institution, and we offer a very large range of financial services for fintechs and payment companies, from multi-currency IBANs, SWIFT and SEPA, direct full acquiring, card issuing, in a very modular, piece-by-piece building blocks type approach.
So I'm Eric Lassus. So I'm the CEO and co-founder of Treezor. Treezor is a bank-as-a-service platform, maybe and certainly the first one in France that we set this company 5-6 years ago. And the idea is to provide all the payment services by means of an API. And so we have built all the block or the banking blocks necessary to build sorry. No, okay, no, I'm working for you. And the idea of Treezor is to build small services. And so to joke, in 1992 I built my first API system, and at that time I explained that small is beautiful. But unfortunately, no one trusts me. So it lasts 30 years to come to API platform. So hopefully I'm getting better. So now people are more trusting me.
All right. So again, just to anchor ourselves, right? The subject at hand is banking as a platform. I'm going to read a memo that a CEO sent to all of his employees some, I want to say 10 years ago. 10 years ago, right? So, point number 1. All teams will henceforth expose their data and functionality through service interfaces. Point number 2. Teams must communicate with each other through these interfaces. Point number 3, there will be no other form of inter-process communication allowed. No direct linking, no direct reads of any team's data or data store. No shared memory model, no backdoors whatsoever. The only communication allowed is via service interface calls over the network. Point number 4, it does not matter what technology you use. HTTP, CORBA, PubSub, custom protocols, doesn't matter. Point number 5, all service interfaces, without exception, must be designed from the ground up to be externalizable. Right? That is to say, the team must plan and design to be able to expose the interface to developers in the outside world. No exceptions. Point number 6, actually I've added this point number 6, I don't know if you wrote it. Anyone who doesn't do any of the other points will be fired. All right, so that's fairly important. First of all, does anyone already know this memo or can guess who wrote that memo? Jeff Bezos wrote that memo to all Amazon employees, right? So he had the foresight to understand that data needs to be ingested in a different way. And the reason why I'm reading this memo, right? You might say, well, it's not really about platforms or banking as a platform because we're in this, we're talking about the banking industry. It's really about like APIs, right? Like he doesn't use the word API, he uses service interfaces. That's basically another way to say APIs. I'm reading this memo for the specific reason that without that mandate, there's no AWS, there's no Amazon Marketplace. There's really no Amazon as the platform that we know it. That's really the enabler, right? It's part technology and part mandate, governance, and culture to kind of ingest data in a completely different way. So, having said that, first of all, do you disagree with Jeff Bezos?
Nobody can disagree with Jeff Bezos.
Do you disagree with me?
We only just met, but not on this point.
But not on this point.
Yeah.
So basically you agree that this is, I don't know if it's one of the ways to unlock, bank as a platform or banking platforms, or the only way. But it seems to me that there's like a huge cultural element that kind of like pushes, this is the way that we are going to do business, and we are going to present data, whether it's we, so like any of your companies, I would hope that you are doing exactly like that internally, and that probably enables you to like sell those services that enable others to become banking platforms. Am I on the right track, or?
Look, I think the amazing thing about the memo is that this was written, I think, more than 15 years ago. And if I look at some of the initiatives that we have here on stage, Solaris was founded in 2016, and so we are doing our third full year of business. And you follow generally the same approach, in that all of the banking services are externalizable via APIs, and that opens up a whole new area of business for anybody that wants to include a financial solution in your ecosystem or offering.
And to me, these words are more broad, brings many ideas. There are many challenges behind. So to me, it's the point is the world is changing very fast, fundamentally, and so we have to cope with these changes. Also, because we change fast, there is more compliance. There are more security needs, more confidentiality, etc., etc. And meantime, we want to scale, but reduce cost. So everything to me is linked with this, with these words. And a platform can help in this strategy to allow people building small services, talking one another in a secure way, keep the data confidential, and also, so you need the right tools. You need to help people to communicate, because we are in a communication world. But surprisingly, people are not communicating very well one another. So we have to promote that communication, and we have to think about how to cope with culture and also the company value, also to set some company value, and to build your strategy coping with all these challenges, which is really not easy.
The way that I agree completely. The way that I really take and see this memo from a banking perspective is actually the real importance of having solid banking technology and platforms internally that can help you to manage the actual governance processes which are required by any regulated institution. So people speak a lot about the sexy side of banking platforms, the open APIs, how people can connect. But the most important thing for any bank or any financial institution is responsibility, governance, and risk management. And so this approach that he has is the way that the banks need to work, and all banks need to work moving forward, which is that humans make decisions, and decisions can be wrong. Banks need to scale at a rate. There needs to be really strong processes and controls that are built into technology when it comes to internal communications in a bank, when it comes to risk management decisions in a bank that can actually be tracked and that can be audited as well. In many banks, larger banks today, they're very siloed in their technology, and they don't have a lot of the internal communication that is actually trackable. So you get into issues where banks are having massive compliance and AML problems, regulators are coming in, they can't even audit the processes or how the decisions were made because people are not communicating through very set standard procedures on technical platforms that they can actually check, manage, and understand.
You wanted to add something, or?
Yes, in fact, it's really a huge challenge to do so. To me, we need to. A company needs to have a very clear strategy, so to remain strategic. The idea is not to build an open system. It's not to use a technology. It's not to use a technology, but to remain strategic. And very interesting to say how the strategy have to be communicate, because the idea is to benefit the technology, to be innovative, to benefit the good communication, so also a good value to enhance our own strategy. This is why I love the idea to be technology agnostic, because as such, the technology is not the point. It's not the point. The idea is to be strategic, so to cope with the current challenges, to cope with the society today. So to build the good use case as fast as possible sometimes, not that costly, so very to reduce cost, etc. So to cope with the economic world, and to remain strategic and to avoid being trapped by the IT things. So I love the idea to be language agnostic, for example, etc. And to communicate that to people. Because you need to have a strategy and to communicate your strategy and how to cope with the strategy.
Yeah, the technology needs to match the actual corporate culture of the business. So if the corporate culture is governance, it's compliance, it's responsibility and control, the technical platforms need to be built in the right way to actually support that, so people are accountable for their actions and they can actually be able to build the bank as they go.
So let's make no mistake here, right? The platform model that Bezos is extremely successful at prosecuting is a great destroyer of other business models, right? A destroyer of models and industries. So do you see yourselves more as enabling your customers on the B2B side, those banks and those that aspire to be banks, to kind of like reinvent themselves? Or are you also, budding destroyers of bank models? And they're like, bankers probably out here that as a result are going to be unemployed tomorrow because of the three of you.
I mean, I can gladly take a shot at it. And, look, what has changed is consumer behavior. And I think traditionally banks, and if you look at their IT structure, it's legacy, it's spaghetti structures which do not allow quickly to change and adapt towards changed consumer behavior. And that's just, it's a fact. So if you look at that and you look at the world out there and you see how a device like this is taking control of everyday's behavior, you need to think, what does that do to my business model? And I would say generally the days of where you go to a bank and you get a product and then you go and consume in a different way, shape or form, they're just gone. The consumer goes to where the product is and then he expects a financial solution to be integrated in that. And that's what, from a Solaris perspective, banking as a platform is doing. Banking as a service, as we call it. Because the modular services allow any product supplier, any ecosystem that is extremely client-centric, to integrate a financial solution in the same look and feel and touch and pricing value proposition without leaving that ecosystem. Where in the past, when you bought a car, you were then, if you want a financing solution, you go to BNP or you go to Commerzbank or you go to Deutsche Bank. All these times have gone. It's all about keeping the client in your ecosystem, and that means you need to integrate a financial solution. And that, I think, destroys, of course, those, I wouldn't say it destroys, it accelerates the process of change. And change is probably one of the biggest challenges of the traditional players, but that's not my problem, it's not our problem. They need to cope with that, and all we do is we adapt quickly to changed consumer behavior.
So I agree. I don't think that the new world of banking technology platforms is going to kill the major banks. I think it is going to create a lot of competition. But also, many of the traditional banks, they work on very old technology. They're very siloed systems. We're going to see them have to change their revenue models, change the way they actually work to compete, because so much of the consumer banking and direct banking services are now able to be provided by alternative players who have the technology in place to do that. So I don't think it's going to eradicate the banks, but I think it is going to really shift the market, the way that consumers are actually behaving in terms of engaging with financial services. And I think that banks are going to start snapping up a lot of these companies themselves to try and actually build and put that technology in-house for themselves. But it's a long process at a bank, and it's a very expensive one. So the new businesses who are starting, who are building their technology correctly, looking at the experiences and the failures of some of the larger banks, they will get a very large part of the market, but it's not going to destroy them.
Same?
Same ideas. At Treezor, we have a double hat because we start as the fintech of the fintech. We remain fintech of the fintech, but we were a fintech. I say we were because we associate with Société Générale, which is a first-tier bank. So now we have the double vision, the internal of Société Générale and our vision at a fintech.
And they're the same, right?
Yeah. And so our vision is to enable some fintech. So we help up to 50 fintech to start their use case, and some of them in France became famous and very big. And we extend our strategy all over the Europe now, thanks to Société Générale network that allow us to do so fast. And the idea is to, indeed, a bank is today transforming his asset, his legacy. And this is definitively not a big bank theory. It's, we want to, they build the system differently, to cope differently, as we want to be more client-centric. And there are some good news in this process. There are some good news. Later we talk about the data. And the good news is that on data, there are many works to be done, many works to... and if I am a consumer, and if I would like to protect my data, maybe the bank is a good place to do so. So there are many businesses that can appear, and there are many things, many services to be built thanks to this open banking strategy. So as a platform, we contribute to the change. I'm not saying that we are the breaker, but we contribute to the discussion, and we contribute to start and to test, and we can fail because it is not so costly to test something, to start a product, etc. And meanwhile, we are working to, and the bank with the Société Générale are working to transform the whole the business unit.
So no takers on like destroyers of banks. I'm
not.
I'm disappointed
They're very
just because.
well capitalized.
All right, but at the very least, right? I would be surprised if she said no. That those platform models are going to re-architect value and power. So power may be flowing from like existing actors that were centralizing that power and might be diffused to like in a different. Am I getting a yes?
Yeah, I understand.
But you know, Pascal, to be precise, you know, this is a trend that started 15 years ago.
Yeah.
It's not something new. You know, you look at the value of some of the big commercial banks and how it has declined over the last 15 years. I mean, some of them are 10% of their market value from 15 years ago. So something already happened before. And then also you need to be looking at what are the different businesses of the banks. And we're not talking about investment banking or corporate banking. We're talking about retail, small ticket, and highly volume type businesses. And there, I think the change is, again, look, everybody can finance a car for 30,000 euros. The margins are high, and the cost can be high, and you still make a profit. But if you look at the change of consumer behavior again, you don't really want to buy a car. You you want to own a car maybe for 5 or 10 minutes in a city and you rent it, and then you have small lot sizes. And that's where the digital models of the players on the stage here come into game, because you can still make money processing small payments or opening up accounts very efficiently with that changed consumer behavior. And that is, I think, it started many, many years ago, and it just continues, and it will continue because of consumer behavior changes.
We'll get back to that, but did you want to say something? I thought that you were...
I suppose I really believe that the new banking technology players like ourselves in the market are especially going to, we work specifically as a provider to neobanks, to fintechs, to these new businesses who are out in the market trying to do these innovative new things, who are trying to offer short-term lending or shared car services or any of these models they didn't have before. So banks are going to lose certain areas of their revenue streams, but specifically they're going to have to transform more into a wholesale model, in my opinion, because the more money that is invested in technology, in businesses like ourselves with really proactive, modern APIs that are fully configured against the regulations and that are able to work with any of these application developers who want to compete with any neobank. It's really going to move the retail consumer part of the business completely away from the banks for a large period of time, and they're going to need to actually change their models to be able to facilitate a lot of those payments rather than actually delivering the services directly to customers. But I don't think they're going to die.
That's an idea that has, that's a point that has been discussed earlier today in various panels, right? The distribution versus manufacturing. I think you used the word wholesale, but it's pretty much the same, right? So am I hearing correctly in saying that, the platform model is really about like the distribution side, and the wholesale manufacturing is going to be a little more monolithic, upgraded with like new technologies and so on and so forth. But those values that are re-architected are on the distribution side, or is that not correct? You were shaking your head.
Not exactly, to me. Not yet, I would say. Not yet. And coming back to the strategy, to me, a bank may have a strategy to cope with what we just have said. But today, for example, at Treezor, we are more a kind of a go-between, because we are a platform that connects many factories. And someone who wants to build a use case come to us and build, for example, and this is to illustrate, for example, if we are talking about retail banking, before we have a retail bank, let's say, and today we have the retail bank for youth, the retail bank for teens, the retail bank for, elderly, etc. So the market is fragmenting, and they want to be, they want to cope, they want to have use case to cope with what we want to do. So this has been said. For example, a platform such as Treezor allow you to build a system to distribute a service and relying on factories. Factories could be several banks, could be several fintechs. So a platform is really providing a very the means to be quick and to build a full-featured product, to cope with what we want to do. And the beauty of the system is that with the same technology, you can build hundreds of use cases. So, but you have to continue to enhance your platform, to add feature to your platform, enhance because you need to scale, because as soon as you have 50, 60, 100 clients, you have to scale. And again, I totally agree what we have said with the business comments. And meantime, you need to have more and more features to cope with the needs of those who want to come to you and say, I want to build this service. Say, how can we do that? And the idea is to provide a tools box, a kind of toolbox, to build the product. And to build it in a secure way, etc., to cope with all the challenges, to build also to cope with the economic models. Because with the legacy system, it is very difficult to make small product or niche product. So because it is too costly.
Right, I'm getting back to a point that you made earlier. Said that this trend, this loss of relative or absolute power by banks, right, has started. You said 15 years ago, placeholder, long time ago, right? So I'll push back on that. I don't think that there are many challengers, be they challenger banks or startups in the fintech space, that have taken a lot of market share. There are very, very few successes. Most large banks, the top 3, 4, 5, 10 banks in every country that I've looked at, has not suffered a significant loss of market share. They seem to, on the retail side as well as on the corporate side, have a stranglehold on clients. And then there's maybe like apathy on the part of either the retail client or the user for change. Maybe the psychological aspect of this is my money and I'm not going to change it. Change its home on a regular basis. Might make it that it's a very sticky business. So, like, to cut a long story short, right? I'm not seeing a lot of rapid scaling. It seems to be like very slow. I don't know that. I'm not saying that it's never going to happen, but not a rapid scaling of these new models and these new platforms applied to banking.
I agree. Many of the neobanks and the challengers in the market speak a lot about their customer acquisition, the numbers of clients, their sign-ups, these types of things, which is a good metric. However, if you actually look at the number of clients who are using their accounts, who are using them for any large ticket items over €100, or who use them as their primary banking service, it is such a small number and a small percentage. So it's a number of issues. One is consumer trust, obviously, when it comes to this, but it's also the level of services that these fintechs and neobanks can provide. I think that many of the banks in the market are not going to lose a lot of market share. They're just going to have to change how they deliver that. And I think many of the banking platform players like us will actually eventually give more opportunity to the banks themselves, because there are many verticals or types of businesses the banks would like to work on and enter into, but they themselves don't have the technology to do the risk management, the compliance management. They don't have the automation to understand the factoring or the profiling of different clients and transactions. So as they adopt partners with other banking platforms and solutions that give them that compliance and regulatory control, they themselves will be able to actually open to new markets.
I would actually slightly disagree with you.
Please disagree, Lee. Way more than slightly.
Because I'm old enough so that I had a corporate life before, and if you look at the corporates, generally it's growth is something that's just non-existent. And if you look at the banks, it's not a big decline, but it's a small decline every year. But that small decline every year is eroding the profitability of those big players significantly. On the other hand, you have growth in the new fintechs or some of the big techs, some of the extremely innovative large techs that is 40, 50, 60, 70% year over year. And even if it's a small basis, it's the growth that is creating value. And so if you look at the value that has been destroyed over the last 15 years, that's not gone. It has shifted to other players. You look at some of the market players, you look at some of the specialty providers, you look at the big techs, of course. I mean, where does that come from? It comes from the erosion of margins of the established players. And that might not be a fast process, I completely agree, but it is happening. And the turnaround turnaround of that wheel is the biggest challenge that you can have in corporate life. Whereas if you're on a growth path, and you look at Bitwala, a combination of the new world blockchain and in combination with an account, of course it all has to be fully compliant. There's zero room for non-compliance in that game. Wherever we start with any of a service, there has to be a KYC at the beginning and AML, money laundering, all that kind of stuff. But that's a normal thing of what we provide to our clients. But then when you look at their value proposition, at their growth, the Tomorrows, the Pentas, Bison, Trade Republic, this is where if you double every year or 60-70% over 10 years, this is going to be a big change. And I think to see that and anticipate it and then take the right bets at the right time from an investor perspective or from a client perspective, just because they are capable to make money with the small items or their new value propositions. And again, if you look at an account at a traditional player, it's very easy to say an account cost me 100 euros per year. I mean, it cries for disruption. If you have a digital process, we can process that account for a fraction of that and less than 10% of that. And that's then the pricing that you can offer for in your value proposition when you include it into a holistic ecosystem. And that's where the growth will be, because obviously from a pricing perspective, consumers are extremely transparent again here. So I think I couldn't disagree more with you.
Yeah, I do.
You
agree.
started from slightly to disagree more, so that's good evolution.
Sorry, I do agree.
Go ahead.
Yes, because to me, yes, I totally agree. And to me, something is happening, and perhaps it's not that visible today, but there is a warning. This is a big warning. When it would be visible, it could be too late for those who have not anticipated what is happening today. And this is why we need today, and maybe today is maybe too late. So those who have not anticipating the change may have troubles in a couple of years, because how many times a bank needs to react, or a big company, when we have in mind that we need to communicate to maybe more than 100,000 employees, to set a strategy, to set value, to put everyone aligned on the same goals, etc. How many times it is needed to do so? And the answer is several years. Meanwhile, we need to transform the system so people do agree and collaborate and be motivated to do so. Years are needed. So, yes, we can say that fintech is not a market that is huge, etc., etc. But the fire is already burning, and I totally agree. And when it will be visible, it could be, at that time, a destroy thing. Today, I think we can work on it, but I think when it will be visible, it could have impact.
Pin that, because I want to say something, but I want to get some questions from the audience. Anyone would like to ask questions to our three panelists? Don't be shy. Yes. Can we have there's a microphone coming from the back. Raise your hand.
Thank you. I would like to go away from the retail perspective and go back to the corporate investment banking perspective that Roland was mentioning before. In your opinion, what's going to happen in the next 10 years from a corporate investment banking perspective? Are we going to see the same disruption we have seen in the retail one or not?
I think you will see disruption wherever there are high margins. And I would look at some of the new blockchain technologies that will be an enabler of that. And from a Solaris perspective, again, 2 years ago, we moved into that space, and we're talking with a lot of partners on use cases that will be bridging the gap between the fiat world and the blockchain world that will be disrupting some of the corporate products. Again, I think the hype is gone, and we're now sort of in the valley, and it's a much more solid discussion about what is a realistic use case, either on the property side or wherever you tokenize any type of value, and how do you then store that value safely. You know, in Germany, from a regulatory perspective, we have laid the groundwork for a custodial service. We launched our subsidiary in December for that. The question then is, of course, the issuing, the market making, and then the storage, the combination with fiat. But again, next 10 years, really big time growth. And particularly if you look at properties where the margins are extremely high and the transactional cost of in and out, I think that again is crying for disruption. But there are other areas, and I would say wherever the margin is high, you will see competitors moving in at digital models, lower cost, enabled by players like us, that will allow that disruption to happen.
Thanks, very interesting.
I would like to add to your observation about the blockchain, and what I see actually, these platforms are very centralized, I would say, controlled by a central party like Google, Amazon Marketplace, you know. So what you said, actually, that's what I like, actually, that the blockchain will enable those platforms to move to ecosystems and to allow, actually, the small players to join the ecosystem and to allow the entry barrier for those small players, and to help to create together distributed, but because it's distributed system, to help us together to create value for clients rather than centralized authority actually having this.
That was not a question. You should have warned me. Anyone else? Yes, this gentleman over there.
Dara raised the point that a lot of the neobanks and challengers have not really got to the stage yet where they have become the main bank account for consumers. What does the panel think they need to do to actually get themselves to that position where they are trusted to be the main account for their consumers?
I think that there's different facets of it. A lot of it is education. If you see a lot of these, man on the street vox pop interviews of people asking normal consumers whether they trust a neobank versus a normal bank versus these types of things, I think a big issue is trust and understanding. So education is a part of it. I also think that it'll be a generational shift as well. I think that there is a significant cultural connection for people in different generation groups to be very loyal to a bank and to have a lot of trust from that perspective, whereas younger generations are, much more enticed by whatever is sexy at the time, whatever they can click, what they can push, etc. So I think we're going to see a shift with a lot of younger people moving on. The issue, however, is they are less wealthy than some of the other generation in the different areas from that point of view. So that is one part of it from an education point of view. And I think the second part as well is a bit more of a presence, actually. We all like to talk about digitization and digital banks, but at the end of the day, if something can disappear overnight online, there's no place you can go and knock on a door or somebody to call, it does breed a lack of confidence for anybody.
All right.
Yes, I do agree with that. I think that when you are building a new use case, you need to really think deeper on how you will distribute your product, and you need to answer to these questions. So by design, you need to bring confidence, security, and so to allow people to be to love your product first. This is, I think, the key the key point. So because if they love your product, I think that there is no brainer; they will use it. So, and after that, you need also to provide all the services around, all the support around, and to promote the product for sure. But the idea to me, it's to design, to think about this before, at the very first stage.
I think with what's happening with negative interest right now, that there is a lot of opportunity for the neobanks to try to offer something more to get these consumers. But the reality is, unless many of these neobanks are fully licensed banking institutions, they're not insured against loss and failure. So anybody who has a few $100,000, a few million in their bank, you need a lot of trust to leave that with somebody.
Yeah, just one more point, right? I think that's where, just like I completely agree, it's a generational thing, but then it's also a trust thing, and that's why, from a Solaris perspective, we started with a full banking license. And so anybody that does the neobank on our platform is fully insured, fully regulated, and has somebody to go to if in case. So I think we view that as an extremely competitive advantage, and you see it with some of the participants that are in the flow area, so payments. They more and more look for sort of the stickiness factor, and then you immediately move into the kind of account and deposit and credit scheme where a full banking license will be required.
I disagree.
Last point.
Anyway.
Time's up. We have one last panel, but please thank our panelists for an excellent discussion. Thank you very much.
Thank you.